Hi, everyone. Welcome to our webinar, AutoRek's webinar. We're delighted to have you on board for this next 45 minutes or so, talking around unlocking efficiency and overcoming the challenges of premium payment processing. So we're delighted to have both Darren from JP Morgan and Piers Williams from AutoRek join us as well. So yeah, it's great to have them on board, and they'll be chatting through some insights into the industry trends and some practical solutions for recurring pain points within the industry. Just to give a quick introduction to myself, I'm Jess. I'm part of the marketing team at AutoRek, looking over the events and the PR side of things. So yeah, I'll be answering the questions and asking our panel of speakers as well some questions. But yes, we are recording this session, so it will be available to everyone after, and we'll have it on our website that you can view as well. And I just wanted to highlight that we have a Q&A functionality as well, so you can type some questions in. We will have a dedicated Q&A session at the end, so we'll be going through those questions as well. Just to introduce Darren and Piers, so Darren Snoxell is the head of insurance and EMEA at JP Morgan Payments. He's got a wealth of knowledge within the insurance industry, having worked at multiple tier one banks, leading their relationship with key insurance clients. Piers is also our head of global insurance here at AutoRek. He has spent the last 7 years helping major insurance to gain efficiencies in their data management and reconciliation operations. So I've had the pleasure of working with Piers over the last 7 years at AutoRek, and with Darren and the marketing team as well at JP Morgan over the last couple of months on a few projects. So it's been great to get to know them a little bit more, and we're excited for this webinar and this session. So on that note, I will pass over to Piers to give you to set the scene on the premium payment processing. Over to you, Piers.
Thank you very much, Jess, for that introduction, and really looking forward to speaking with everyone here today on the webinar. So just in terms of today's topic around premium payment processing, I wanted to start by looking at some high level data, just to kind of, I guess, outline where we are, or the focus of today's conversation, but also the importance of the premium payment processing topic to the insurance industry. So we pulled together some analysis here, taken from a number of different sources, and I think certainly would like to just qualify that definitely some estimations here. Very, very difficult to get exact numbers across the metrics that we've pulled. But the first one is that there's a £5.4 trillion of GWP was written across the global insurance market in 2023. Now that is a huge number, and really just shows the volume of capital that is flowing through the sector. But all of that capital must flow typically through a number of different insurance organizations, and the importance to have the right processing, the right controls in place to effectively manage those flows of capital. We then look at that going forward. We can see that 5.5% annual growth is expected over the next decade. So that number is only going to grow, it's only going to increase, and hence the importance of having effective operations in place to support that is absolutely key. But the most important metric on this slide is the bottom one, and that's that around 5 billion insurance policies are sold globally on an annual basis. And why is that the most important? Because specifically we think of premium payment processing, the volume of payments, the volume of transactions is a key driver to complexity within the processes, but it's also a key driver around some challenges, and also the need for optimization across these. So hopefully that sets the scene, and from the attendees that we've got joining today also outlines the importance of your roles within your respective insurance organizations, and just how key these processes are to get right. But what do we mean by premium payment processing? So a very broad topic potentially, but I just wanted to focus in from an AutoRek perspective with a bit of a definition. And we have defined premium payment processing as involving managing premium-related receivables and payables data ensuring accurate allocation of funds and reconciliation of payments to maintain clear and up-to-date financial records. And I just wanted to break that down a little bit more and provide a bit more context. So premium payment processing involves managing premium-related receivables and payables. And I think that's absolutely key. When we're here talking today, we're talking about premium receivables and payables that are directly related to the sale or the distribution of insurance products or insurance policies. Generalized accounts receivable, accounts payable, much bigger topic, but we're very much focusing on those receivables and payables relating to the insurance policies. And the mechanism by which those are exchanged is data, whether that's a statement, a remittance, a bordereau, can take many different forms across the industry, but it is the key mechanism by which that information is exchanged between parties and different organizations. Then secondly, ensuring accurate allocation of funds. So that is absolutely the core job of premium payment processing, is taking those different payments and aligning those with the correct internal items, whether it's a receivable or a payable, and making sure that those link up. And then we combine that into the reconciliation of payments to maintain a clear and up-to-date view of your financial records. And again, that absolutely emphasizes that importance of not just the reconciliation, the accuracy, but actually how that feeds into a business's wider back and middle office financial operations and controls. Ensuring that you've been paid for all the policies that have either been sold or that you've distributed and passing on the correct premium is absolutely vital to any organization. Now, insurance is an industry made up of many different players. There's lots of nuances around, who does what, different models. But what we look at it really from more of a generalized view is kind of three subsectors: insurers or carriers, if you're looking at it from a US perspective, your kind of more traditional insurance broking model, and then that MGA, potentially MGU market as well. And the reason we outline these into three categories is that, broadly speaking, you can generalize processes, requirements into one of these subsectors, but we're not naive to the fact that brokers will act as MGAs, MGAs will act as MGUs, effectively working as more of a carrier. But for the purposes of today, generalizing it into those just makes it a little bit easier for us to understand. And I wanted just to quickly highlight, probably something you'll all be familiar with, but what do those processes at a very, very high level look like? For example, in this instance, an insurer or a carrier. So they might be getting payments directly from consumers, credit card payments, premium finance, direct payments to their bank, BACS, ACH if you're in the US, or potentially, again, that could also be via a check or even cash, although those are becoming less regular in the market. You've then got that broker distribution, so an insurer sending a statement to a broker on a monthly basis. You've got a settlement reconciliation where you agree the positions, the values. The broker then sends a bulk statement back to the insurer, a bulk payment alongside a remittance, which the insurer then needs to allocate. And on the MGA side, the MGA will issue that written bordereau. On the following month, they'll typically send across the paid or the settlement bordereau with the associated bulk payment. And the insurer needs to manage all of that, potentially also then feed that on to a reinsurer. So a few different facets there to manage and hopefully just qualifying what many of you will already be aware of. If we then look at that from a broker's perspective, so we're looking here more the broker working with that consumer. So again, all of those premium finance, credit control, direct payments. The broker then needs to receive those, allocate those against their respective policy admin or ledger data, deduct any commissions, any fees that they may have earned before sending on the net premium, any taxes to the insurer, or indeed potentially the MGA if it's a delegated product that they're working with. So again, from a broking perspective, the receivables and the payables are very, very key to their business operations. And then finally, from an MGA, I guess a hybrid of both of the former two that we've run through: consumer payments, maybe some broker-led distribution, but also through other MGAs. And again, the same requirement to calculate, deduct their fees, their commissions, send on any net premium, as well as tax to their insurer, or indeed maybe a reinsurer, just depending on who they're underwriting on the behalf of. Hopefully that has just qualified some of the things you'll already be aware of. And as we move on to now, what is the status quo of premium payment processing today? And I'm really interested or really eager here to share what I see on a daily basis. My role involves working with insurance organizations from right across the industry with all different types of requirements. So we really have a unique perspective here at AutoRek, where we get all of that feedback and really can understand what, I guess, the temperature of the market is and the professionals within that. And I thought the best way to probably bring this together is across process and technology, the business teams and the people who I would say are the most important in the market, and then what is the associated business impacts of some of those status quos today. So if we look at it from a process and technology perspective, Excel, I would say, in my experience, is still very widely used within the market, and certainly, not the minority of cases. So again, if you are still relying on Excel, you're definitely not alone in the market. Again, a lot of firms will also use maybe what I would define as a semi-automated process. And what I mean by that is maybe you've got a policy admin system or a GL or a ERP type system, which offers some kind of more generic receivables, payables solution that's sort of retrofitted to insurance, or it's a bolt-on to a policy admin, which may provide some features and functionality, but it is normally typically limited, maybe not very automated. So we would consider that as a semi-automated approach. And then finally, legacy systems where a firm might have invested in an in-house proprietary software package a number of years ago or has an off-the-shelf older system. But those are probably the most typical ones we see. Now, of course, automated platforms are becoming more and more found across the industry, specifically amongst our client base, but I still wouldn't say that's majority. I would still say that probably the majority fit into one of those categories. And it's not to say that any of those are a wrong approach, but they certainly do lead to some business impacts that I've outlined below. But I guess, what are we hearing from the business teams? And I think, frustration and stress is a very generalized topic, but I think that's really drawn by the next point, is that, essentially people are being asked to do an ever-increasing workload, but there's not necessarily investment in making that easier. There's also a real consciousness around cost and budget. So perhaps there's also a reluctancy to hire things. And that brings me on to the next point, which is very much most professionals that we deal with that maybe don't have a solution today are feeling like they have no ability to actually effectively change and build for the future because they have no time, no capacity to focus on improvements, understanding some of the root challenges that sit behind their process. And that actually leads to a situation where we've got very challenging relationships across insurance parties in the market. So whether that's a broker to an insurer to a broker, we very much stay impartial from an AutoRek perspective. We don't like to take sides, but we certainly do hear it from multiple sides. And I think there are some really easy enhancements to the processes that can actually solve a lot of those challenges. And then separately, my final point is, as we will have all seen, there's been huge investment into the front end, customer-facing, revenue-generating initiatives over the past number of years. And I think, those have delivered some fantastic results. But there certainly has been a bit of an underinvestment when we think about the back and middle office space. But what I can say is that momentum is changing. We are seeing an increase in the number of projects, the focus from management and leadership in businesses, and their real understanding of the opportunity that optimization of things like premium payment processing, back and middle office operations can bring. And I guess the business impact that leads us in fairly well to these. The business impact that the status quo is having is definitely operational inefficiencies. We've got some really highly skilled practitioners in the market that are just focused on manual, repetitive tasks that are not very rewarding. They're not very fulfilling. And actually, that's a real lost opportunity to deploy skilled resource far more effectively. I would say we do see a fairly high volume or value of premium being written off. And there's a number of reasons behind that. The inability, as I said, to focus on the exceptions, and it's just trying to deal with the the things that you can process, but also just a lack of technology, a lack of management of the overall process, which things maybe get forgotten about, things can never be resolved, and therefore they often get written off. And I know, that can be quite a significant number, and dare I say it, maybe even 1% of GWP for large organizations. I've certainly seen numbers in that region, not saying that's an industry average, but we've certainly seen examples of that. Again, with any kind of, sort of manual process, Excel driven or semi-automated, that maybe doesn't have all the controls, all the automation needed, you have a risk of errors. Which that can lead to a number of things, from the last point there, which is inaccurate reporting, but also costly corrections, further time that needs to be used to resolve. But I think slow processing is a huge one. If we look at other verticals of financial services, investment management is a great example that's moving from a T+2 to a T+1 settlement. We're a long way away from that. And I'm pretty sure everyone would agree. Maybe on the B2C side, from a consumer to an insurance organization, we're doing a bit better. But certainly on that B2B side, we're seeing 30 maybe is a bit of an outlier, but 60, 90, 120-day settlement terms. And when you think about that across the distribution chain that might involve a number of third parties, that can be 6 months, a year, until the end party is receiving their ultimate payment for a premium. And that, for me, in 2024, is a real room for improvement. Now, we might not get to T+1 or T+2, but we could at least aim for 30 days. And I think that would be a very good movement for the market, accelerate and unlock cash flow, and deliver a number of other benefits. But I guess we've looked at the status quo there within the market, but what is actually driving these challenges within the market in a bit more detail? And again, based on conversations that I have day in, day out, there's a number of key themes that align into that. The first is data. So we know that insurance as an industry has somewhat of a frustrated relationship with data at times, and that can be from a data quality perspective. Both organizations in a B2B context are working off different policy references, different client name descriptions, different data formats that are being shared, making it a very challenging environment to operate within, and really just make sense of a lot of the data that's being shared. If we then bring in timing, so I mentioned previously, we're looking at potentially loading data or managing data from your internal system. We're not actually going to receive a payment for 60, 90, 120 plus days. So there's actually a real data management requirement within this, where we need to hold that data, we need to report on that data, so that when the associated payment comes in, we can process that payment, apply the capital, etc. Then we touched on it when we went through those different distribution and payment processing models that different organizations have. As you saw from that, it's very rare that there'll be one payment process or one payment method that's offered. So you've also got to manage the data, the timing across different payment methods, adding yet a further layer of complexity. And then if we look at the number of third parties, when I deal with insurance organizations working in a B2B context, it's never 10, 20 or 30 third parties. It's always 100, 200, maybe even 500, 600 and 1,000 for some of our largest clients and conversations that we have. And again, when you bring all of that together, already hopefully that paints a picture of, well, where do we even start, right? That sounds like a lot of moving parts. How do we manage all of that data? How do we consolidate it, transform it into something meaningful, and then ultimately process that correctly and accurately? And actually, I haven't mentioned the last point around a legacy process, because I actually truly believe that this is a big driver. If we think about the process today from a B2B perspective, both organizations will work on their respective systems. They might complement that with Excel. And how do they exchange data? They'll exchange it via sending documents, maybe a statement, a remittance, a bordereau. Again, it could be many different names, but those are kind of the core ones we see. And they're doing that via email, and then sending backwards and forwards queries, challenging exceptions between the parties. Now, that is using technology, yes. But in my view, that is using technology that perhaps was developed and enhanced 10 or 20 years ago. And the process really hasn't moved forward, embracing the latest evolutions from a technology, payments, and wider trends within the market. And that's why I feel we've got a legacy process. We're really not utilizing technology to the fullest of its capability, and we're perhaps stuck a little bit behind the times, so to speak. And that's something I think that would be really transformative to move forward. We talked about the status quo though, and with every challenge comes opportunity. So what are my views on how we can really overcome these challenges and where do opportunities lie? And again, I think across these in three different categories, from a technology, connectivity, and payment enhancements. And first of all, let's jump into technology. So when we think about some of those prior points I mentioned with regards to data, managing that data, consolidating it and transforming it, that's where automation comes in. A broad topic, I admit, but bringing all of that information together is often a repeatable, uniformed approach. Maybe not always uniform, but repeatable, certainly, that we can leverage automation. Again, increasing the efficiency, optimizing your process, having your skilled people work on less manual, repetitive tasks, and focus on the value add, looking at genuine exceptions within payments, working with your third parties and developing better relationships. And that's where I think automation has a huge amount to roll, is, I guess, automating the mundane. You know, it's 2024, so we can't go through a webinar without talking or mentioning AI. So apologies for the buzzword bingo. But where do I see AI? And I guess we've at AutoRek have focused for a number of years now on intelligent automation. And intelligent automation is using logic to provide intelligent recommendations, suggestions, and analysis of data. Now that takes a bit of time, it costs some money, and it also, needs to be further enhanced over time. What automation does, it does all of that more quickly. Whether it will do that at a cheaper price, I don't yet know, we'll have to see, but it certainly does it more quickly. It continues to do that on an automated basis, and it will really help us get to those end results, provide those insightful outcomes more quickly. And that's where I very much see it doing, is supplementing what we have today, being that almost virtual assistant rather than essentially transforming and removing work. Blockchain, again, not one we hear perhaps as much about in the market, but something I do see an opportunity for, and a number of benefits can be utilized from connecting and exchanging that data on chain. But one I will probably pause and hold on for my section, because I know JP Morgan has some fantastic products in this area, and probably are much more qualified to speak about that. Again, open banking, one that I don't feel is leveraged enough, but there is a huge amount more connectivity both to receive and integrate back with banking providers from a data perspective, from a payments perspective, and I think that could be further leveraged. And then flexibility. I guess, not a technology as such, but I wanted to point this out because insurance often, as you'll know within your organization, tends to not have a standardized process. And yes, we're in advocates of standardization where possible, but we do appreciate there will always be some quirks, there'll always be some nuances given the nature of the industry. And that's why I think it's important to bear in mind that we need to be flexible with our technology to accommodate those. If we move on to connectivity, I think perhaps this is, probably some of the greatest work to cover, some of the most ground to cover, for want of a better phrase, but presents probably the biggest opportunity. And I think the first point is integrated services. And that's why we're so excited to be working with JP Morgan. I know prior to our partnership, we very much would be working with a client. They would have their internal data, they'd have their third-party data, they'd have their banking data. There was never really an opportunity for us to affect change and get more value out of that data. Suddenly, when we're working with JP Morgan, we can have these conversations with a client, but that bank, instead of being this kind of opaque organization and you get what you get, we can suddenly work together to provide much better market solutions to the client and deliver better outcomes for the insurance industry as a whole. The next one is integrated organizations, and I think this is key. So instead of you working on separate platforms, let's connect those platforms. Let's have that data exchanged, comparable, work together collaboratively on queries, exchange information and agree positions. That is huge in my view, and just really in the interest of collaboration, partnership, and working together to drive the industry forward for the better of all. And, last one, data standardization, maybe not in connectivity, but the reason I put it in this one is if we can agree as a market, certainly with the AutoRek client base, we're looking to agree and get some more standardization across data, because we work with brokers, insurers, and we ingest and work alongside data. But we want to standardize, where possible, and agree some kind of common standards across data, because that in itself is hugely transformative. It's going to reduce costs, reduce the overhead of solutions, and ultimately drive efficiency in the future. And then the final one, payment enhancements. The payment sector has seen a real, evolution and a huge revolution over the last number of years. And the first point is, when I work with clients and we help them with solutions around B2C customers using payment service providers, premium finance, those are actually very easy to automate. We can get very high levels of straight-through processing and great outcomes. And actually, I think the technology is there, but we need to leverage that technology on the B2B side of the market. We need to apply it to the use cases, to the challenges, and to the specific data. But if we can do that as an industry, I think there is a huge opportunity to leverage what's already available. And the final one is things like ISO 20022, which is a massively coveted and very well uptaken payment messaging standard. And within that, there's an opportunity to exchange a greater, more rich, more detailed level of information across payments. And that in itself will solve some of the challenges of a payment getting sent and separately a remittance or a statement getting sent, and that requirement to contextualize what that payment's for and align that to a disparate data source. We can have that all within the one, again, further optimizing that premium reconciliation, allocation, and processing operations for insurance firms across the market. And I guess just here's a bit of a diagram around, some of the initial things that we're looking to work with JP Morgan on around, how can we better service the market? And it's important to say this is just the first of many hopeful iterations and innovations that we can bring to the market. We wanted to start with something that's manageable, achievable, not redesigning the wheel, so to speak. But I guess let's talk through this. So on the right-hand side, where we say credit control, we've got your insurer or carrier, could be your billings and collections, could be your accounts receivable team, might have different names, but largely in a non-delegated context, what will happen is that insurer will issue a statement to the broker. They'll then agree that through a settlement or insurer statement reconciliation process. And that can be an iterative process backwards and forwards. And certainly in a future iteration, that's something we want to be more connected. But once we have agreed that monthly settlement, at this point in time, a remittance will be sent and a payment will be sent. And if we jump across that line where we've got payment service providers and banking, this is where it gets really exciting in my view, and hopefully from the JP Morgan side. But when we share information with JP Morgan, we can share really rich, detailed information in the form of a payment message, let's call it. Now, working with JP Morgan, we can help keep the integrity of that payment message as it's moved through the banking infrastructure and ultimately lands with the insurer or carrier. Now, that might be in the form of a batch ID, which we can then use when we take it in on the banking side for the insurer to actually align that to that remittance. Whereas at the moment, we have this agreement and settlement process, and then typically we have another process, which is essentially trying to work out, well, we've received £100,000 or $100,000 for these 10 policies. What policies does this relate to? We can actually connect that data up and provide that linkage, which is going to streamline the process on the insurer or carrier side, and also on reducing the burden on the broker side. And then if we look at future iterations of enhancing that first piece, it's really exciting where we can take this and what we can do in the future. And hopefully that's been a useful insight for the audience today on where we see the industry, some of the challenges, some of the opportunities, and actually really just trying to share more information on what we're looking to do alongside JP Morgan. And I'm now going to hand over to Darren, Darren, I'd like to thank you for joining me on today's call, but to share a little bit on the evolution of payments for insurance and a little bit more information around JP Morgan and what it is you're exactly doing within the market.
Cool, thanks, Piers, and thanks again for inviting us to join the webinar. So, look, I think you've touched on a couple of points already, right? Of the evolution of payments and actually how, by working together with the industry and partners like AutoRek, we can actually smooth some of those some of those peaks and troughs around the information, the data that's carried in those payments, and kind of where we can help the industry move forward. But a bit about JP Morgan Payments. So look, we understand payments better than anyone, right? We process over $10 trillion a day. So $1 in 3 US is cleared through JP Morgan every single day. We're in 160 countries. We process in over 120 currencies. And we look to innovate as the world and technology innovates, so must payments. So our vision really is quite clear: is to transform the future of payments, become a trusted innovator, and empower businesses to thrive. And payments are at the source of that, right? If you think about it, every insurance transaction starts and ends with a payment. There is a premium payment, there is a claim payment, and everything that goes in between that is potentially reconciliation. It's getting that cash and liquidity through to the investment team as quickly as possible. It's really looking at how you can smooth that process as it kind of goes through the machine. So what JP Morgan Payments brings to the table is the ability to combine both innovation and trust. So we combine the best of a bank with the best fintech solutions to create a more powerful, sustainable growth lever for businesses. And we really deliver that in four ways. So I touched on innovation when we think about building or buying and partnering to give clients the solutions to simplify, adapt, and connect to the global market that is insurance. From a trust point of view, it's leveraging our top-grade cybersecurity technology and expertise as a bank to ensure that we protect our clients' businesses at all times. From an advisory point of view, it's that global and local expertise and having a segment-driven coverage team. So again, me and my team, we cover our insurance clients, and we're really looking to plug into the global network around that, and use the data-driven insights where we can to help businesses grow and become more efficient. And we do this at an incredible scale. So no matter where our clients are operating, we can develop and deliver those solutions to simplify their payments. So Piers, look, you as I said, you touched on it around the collaboration with AutoRek and JP Morgan Payments, and I was very much of the opinion, like you, it's how do we partner, how do we work together to actually deliver a solution? So the reconciliation process is a complex process, especially in the corporate market, in the specialty market, and the industry has been facing these challenges for decades, right? So similar to you, when we speak with clients, their main challenges are pretty much the same, right? It's the data discrepancy. How do they reconcile when the differences that come from their insurer system is different to the payments that the policyholder or the broker makes? Are there different currency fluctuations? Are there net of premiums and claims? Are there commissions that are deducted before that premium hits? So, they can really arise from all of those different reasons, possibly data entry, incorrect policyholder information being given at the time. So you're dealing with the data discrepancy as it comes in from the source. Integration issues are also a problem, and we kind of see that from talking to clients around different systems used for policy administration systems, to billing, to accounting, to all of the technical accounting functions. That can lead to an integration challenge, making it difficult to have a unified view of the premium collection. Delayed payments, clearly payment and cash is the lifeblood, right, of a company. And whether that's a multi-billion GWP insurer down to a small insurtech or an MGA, this is still the lifeblood of a company, getting that cash in, making it as seamless as possible, and complete that reconciliation process as quickly as possible. And then the industry, again, to kind of challenges with this are well known around the lack of automation. So without an automated system, that reconciliation process typically is manual, and it's very labor intensive and inefficient. And again, as soon as you like it or not, it increases the introduction of human error in doing those processes. So we were discussing this with a number of clients, but we were discussing with one in particular, a large insurer, to help automate the reconciliation of some of their incoming multinational captive premiums. And we were discussing how our virtual account solutions could help with that. And whilst our solutions on their own were perfect for relatively straightforward, so one-to-one premium receipts that were paid by their clients, the client says, well, we receive 60% of that premium from a broker. What can you do to help us with that? Will those virtual account solutions help with breaking down that bordereau, with allocating that premium to the individual policies? And really, there's no sort of bank process or bank solution or offering that can do that. So that's where I kind of introduced the idea of bringing a third party to the table. And to your point, Piers, it's how can we work together with the insurer, with AutoRek, and with JP Morgan to kind of build an end-to-end solution. So it's kind of one thing looking at the payment reconciliation first and foremost, but then working with AutoRek, to your point of, the banks were just kind of invisible in the background to AutoRek and the clients before. How do we kind of bring the right people into the room to work through the challenges with the client, right? The client knows their problem, you understand the reconciliation process, but ultimately we're responsible for moving that cash, getting it to the right teams, and being able to manage that payment inflow, and then equally on the outgoing side in terms of a claim. So it was less about just kind of selling them a solution or a product that did half the job and then letting them sort of solve the rest for themselves. It was very much, how do we bring in a partner? How do we work with someone that is a specialist in this area? And how can we sort of really build out an industry solution, combining both our products and AutoRek's reconciliation capabilities? So that's what really kind of drove us to look at the collaboration and look at the partnership. And clearly from a couple of your slides, the overlap into sort of how we're then thinking about how to maybe sort of develop some joint solutions where it can really start to embed the granularity, the data, the unique reference number that can transform some of these insurance companies' back office processes and make them more efficient is really exciting. So I guess we kind of did a market scan. There are other reconciliation platforms out there, but we were really impressed of kind of the dedicated focus of you and your team around the insurance segment, and played very much into what we're doing and building out the insurance segment here at JP Morgan. So this was vital in kind of when we analysed how we could introduce and how we could trust a partner to introduce to our clients and could really build a long-term relationship with. And the things that really stand out, one is around the customizable solutions. So again, we looked at various other providers and other reconciliation platforms, and naturally being in banking and covering insurance clients, certainly for me for the last 15 years or so, I'm surprised that not more insurance clients are using a financial reconciliation platform to do this. And we hear a lot of it around the complexity and being able to sort of unpack the bordereau process. So having a partner or a collaboration with AutoRek was around that kind of customizable solution that was really tailored to the insurance industry, and not taking an off-the-shelf reconciliation platform and trying to make it fit. It was actually understanding that process, and obviously people like yourself and Mark coming from the industry, knowing the real challenges and being able to speak to that. So that was kind of key for me individually. I think the track record, 30 plus years in the reconciliation process, and AutoRek as a company that have kind of developed and continue to invest in that. And obviously then the amount of automation that the platform can deliver for the insurance segment. So I think in summary, the work that we've kind of done so far with AutoRek is really interesting. I think we can take it to the next level once we're into some of those really kind of meaty conversations with those insurance clients. And we've spoken naturally since launching and announcing the partnership at the back end of the summer, really to a number of different insurers that have either heard of AutoRek before, maybe dealt with you individually and are kind of intrigued to kind of see where the JP Morgan payments angle kind of comes into working with AutoRek. But in summary, it's about getting the right people in the room and making sure that we are building, delivering, designing an end-to-end solution that can really solve some of this problem and some of the challenges. So I think we're on the same page clearly in terms of some of the challenges and some of the opportunities it presents. But as you kind of rightly say, I think the complexity of some of the payment structures that insurers are dealing with in the various payment methods, the way that they collect, the way that they are trying to deal with large volumes of transactions. And, we see a number of disruptive technologies or disruptive players in the market that are really looking to change the way insurance is bought and sold, and matching risk appetite with risk capacity. But they're not really looking at the bigger picture of how the money moves through the system and how that can be reconciled. And there's a focus on delivering some of the benefits of automation or digitization at the front end. And then similarly on the claims side of things, we see insurers that are looking at using AI in the claims process and how that can kind of speed up that. But it's the bit in the middle, right? Getting that premium in, reconciling it, making sure that it's in the right hands, in the right place, and being able to really kind of get that through the system much quicker. So streamlining the sort of financial data, the application of that, and the cash allocation clearly to help with the credit control. So look, I mean, we're on this journey. We've started sort of 2-3 months ago in terms of socializing the partnership, looking at clients, bringing that into some of our conversations already, and clearly starting to build some products or solutions that we think will be relevant for the industry and can really sort of change and move the needle in terms of that premium processing. So like delighted that we've kind of sparked off or kicked off the collaboration. Really excited to kind of see where it goes, and can't wait to kind of work with Piers and the team as we look to build out new products, new solutions, and really change some of the dynamics of the industry that's kind of plagued the automation story for a number of years.
No, thanks for that, Darren, and again, echo many of the points there that Darren has highlighted, and echo the excitement more than anything to really unlock that opportunity to work with JP Morgan, because when we work with clients, one of our biggest use cases is always bringing together their internal and their external data, and having the ability to work with the internal and also influence the external. I think is going to be a huge enabling piece, and I think the industry as a whole, if we can come together, we can solve many things through collaboration, and ultimately deliver better results for the industry in terms of efficiency, accuracy, control, and hopefully for the many practitioners joining today's webinar, just increase the satisfaction and how rewarding your day-to-day can be.
And I've been actually this morning to the Insurance Innovators Summit, so one of the multiple kind of insurtech conferences, and we're speaking to a couple of clients there or insurance companies that really, yes, as soon as you mention bordereau, as soon as you mention that process, it's kind of eyes a roll. Yes, this is a problem. We know it's a problem. Largely manual, largely kind of labor intensive, and knowing that it kind of works, but it doesn't. It works to a degree. It works to the fact that ultimately, at some point in the end, things do get reconciled. They do get kind of allocated. But it's like, how can you automate that? How can you actually divert some of that work, to your earlier point around the manual repetitive tasks? How can you kind of start to build some of the sort of more interesting roles and look at it from that perspective? But just still the ability to, from a payments point of view as well, start to automate some of the things that happen after that allocation. So whether that is automating investment decisions, or once that cash is allocated, automatically sweeping those funds into a money market fund or a deposit account, or getting that into the investment team much quicker. How you can take the data that comes from that as well and actually start to use that in a more productive way, and whether that's from a credit control, being very targeted in who you have to follow up with, and knowing who you need to kind of focus on, to then whether it's different lines of business, whether it's different kind of brokers, or you can just provide much more information to those insurers that are using that platform. So I do think that there's a lot of room for improvement, and a lot of ways that we can, I wouldn't say kind of leapfrog some of the technology, but certainly, together we can certainly make a difference to some of these processes.
And I think, Darren, just to pick up on one point that you mentioned there is, when we look at these processes, the actual matching and allocation of payments, Probably fair to say that's actually 25% of what we do. You mentioned credit control there, which is the reporting on where we've been paid, where haven't we been paid, integrating back with other systems, whether that's a policy admin, a GL, journal postings, or postings back to the PA, the policy admin, maybe feeding that into other finance tools, investment platforms that then drive other decisions within the organization. We look at that journey. Our goal is to automate the end-to-end process. And actually a lot of the value of what we do is, yes, at the core of what we do is we match A versus B. Now, it's probably always a bit more complex than that. That's kind of, our niche is we automate the complex. But it is actually the reporting, it's the management of that data over a period of time. It's the advanced data enrichment features we've got to standardize that and make it more comparable. It's the calculations and business rules engine that we can apply accounting logic, can manage multiple currencies, which was another point you mentioned, Darren, and help with conversions so that you can match to the correct currency. And then also things like workflow, streamlining the investigation, the resolution. So there's a number of other key drivers. And I think perhaps historically the insurance industry has thought, a reconciliation platform is just the matching. And maybe the industry has seen, some of the solutions, you're right, Darren, there are multiple solutions in the space, but they probably look at different use cases and they're focused on different industries, maybe different challenges. Whereas at AutoRek, what we do is we very much focus, as you outlined, Darren, on I just do insurance, and that's all we do here. And we have a fantastically flexible solution that we then specifically align to the challenges of that market. Some of my colleagues work just on payments with the big global payment service providers, others in banking and others in investment management. But we very much work as kind of distinct business teams because we understand to unlock the flexibility and all of the features we've got, you've got to really understand the client's business process. You've got to be able to speak their language. You've got to be able to come up with solutions. And ultimately, if you've sat there and you've done their job, that can really, really help because you can kind of resonate with them a little bit. But that, I think, is probably, one of the keys to our success is really that focus and applying our very fantastic tool set to those specific business challenges. And we built up a really great, reputation and also a fantastic set of clients in the market over the past number of years. And we look to continue doing that alongside JP Morgan in the years to come.
Yeah, and I kind of think I mentioned it in the opening, right? Our kind of thought process and our view is if we can't do something internally, right? Who can we work with? Who is best in class? Who can we partner with? Who can we kind of really bring in to help us deliver that end-to-end solution for clients? And it's really coming again from that viewpoint of having sort of covered the industry for 15 years. And let's think 15 years, a lot has happened in technology, a lot has happened in consumer expectation, a lot has happened in the way that insurance is bought and sold and claims are paid. But the age-old problem still exists. There is a very heavy reliance on manual processes, that systems don't speak to each other. The data from one party to the next is generally tarnished in some way because counterparty A uses it for one purpose, B uses it for another, C uses it for another, and all of that data is kind of collected along the journey, but none of it is used and standardized in a way that maybe from a banking point of view, and again, this is sort of one of the things that we've discussed before, was the insurance industry has kind of tried to standardize with things like the Accord standards. The London market has its kind of own standards and naturally the complexity within that as well. But when you touched on it around some of the sort of operational aspects within banking, for example, and the ISO 20022 standard not only gives the standardization that should make payments more effective, cross-border payments more efficient because of that standardization, but it allows you to carry much more information in that payment. When you've got someone that says, right, well, my reference number is 14 digits long, but actually the banking system can only cater for 8 or 12, you've got to truncate it some way. You don't know what's kind of, you know, being missed off or not being passed along. The ISO standard obviously, you know, makes that much more enriched data that can kind of help with some of that, whether it's just more information within the payment message itself, or being able to even attach documentation. So, you know, when you're talking about premium incoming or claims outgoing, if the insurer can even attach some sort of, you know, remittance advice or notice within the payment that then can get passed on to the beneficiary, you know, that's a massive game changer. And I think once you've kind of got some of the flexibility within the data standards, then that's kind of when you actually start to change business models or to support new ways of working.
And I think, Darren, you know, we hear a lot about the ISO payment in other sectors. I'm not hearing enough in the insurance sector. So hopefully we've done a little bit today to kind of share the insight and you know, maybe educate a little bit on what's possible. I think, you know, I can see a couple of questions. So before I hand over to Jess, maybe to run through those, just a closing remark from my side is, you know, I'm sure many of the insurance industry professionals today, you know, logging into this webinar, hopefully some of these challenges resonate. It's not something new. And really the closing message I would say is, you know, there are opportunities out there to overcome the challenges you're presented with. And of course, please do reach out to either myself or indeed Darren, and we'd be more than happy to, you know, discuss how we can support you guys together or separately as organizations, as you see fit. But yeah, Jessica, I think we might have got a couple of questions. So just conscious of one eye on the clock, and I thought I might hand back over to you.
Yeah, of course. Yeah, it's just another opportunity for people to put some questions in the question box as well, and we can go through them. But yeah, just kind of want to kick us off. And I know you've kind of touched a lot on this already, talking about like the different industries, and you know, talking about if we can't do it internally, that we should really go like adopt like other partnerships and kind of work with third parties. And this is probably something that a lot of industries can adopt as well. But are there any, just from like the challenges faced within insurance, is there anything that we can learn from other sectors across the industry? Darren, I might just go to you first on that one.
Yeah, and you know, touching on the sort of the ISO standards, but I guess more broadly, regulation has played a large part in the banking space. So the PSD, so Payment Service Directive, was a regulation that came in sort of 2007, 2008, with a view of increasing competition in the payments landscape. So that really was the spark for things, not only for the single European payment method, so SEPA, to kind of harmonize that, to kind of make that more standardized, more fair for individuals paying across the European region. But it also opened up for competition from fintechs and payment service providers, things like open banking, APIs, you know, standardization, and the UK was kind of a leader in that across Europe, and has a very mature and successful kind of open banking infrastructure and architecture. Was one of the first to initiate faster payments, again, sort of real-time payments, with a threshold now that's up to £1 million sterling. So again, when you're talking about the crossover to insurance claims payments, for example, how can you actually leverage a real-time instant API initiated instant payment to a policyholder, rather than saying, yeah, your claim has been approved, but it's going to take a minimum of 4 days for you to get the money, or we need to send it via a real-time, wire payment, a CHAPS payment in the UK that's going to cost you as an individual maybe £10 or £15 to receive, because the charges are much higher than sort of sending it in a different method. So I think it's the ability to sort of harness some of that technology, and APIs definitely around moving away from sort of batch processing of payments into kind of this always on, using real-time payments, using a global kind of API initiation format as well, that can be used really, anywhere that has a real-time payment or a faster payment network. And that's the kind of stuff that I think is changing business models in other segments. The ability to have this kind of open pipe, that as soon as you need to authorize and make a payment, it is sent and it's done, and it's within the beneficiary's account within seconds, not, where we still see a lot of insurance companies kind of looking at batch payments. We'll send it on every sort of third Wednesday of the month, and that's when you receive the claim payment. So I think learning from things like that are clearly crucial, but again, it comes down to that was driven by a lot of the regulatory environment, and I guess the regulator from an insurance perspective is more focused on the consumer. Consumer duty is it a fair outcome for the policyholder, especially when you're talking about personal lines. But I guess that fair outcome you could also overlay with, well, are they receiving the claim payment in a timely manner, in the right way? Do they have an optionality of where they receive that money into a PayPal account, into their bank account, into a different currency? All of those things you could kind of levy the consumer duty or the fair outcome for customers, and learn and take some of that maybe from other industries.
Yeah, definitely. I think APIs are the way forward, and we're seeing that across the sectors that we work in as well. So definitely something that's going to help. And I guess, Piers, with the API integrations, think you've mentioned about T+90 sometimes in the insurance space, but do you think that will help it kind of bring it down to that T+30 with the APIs integration?
Yeah, absolutely. I think that will break down a lot of barriers. Certainly some of the systems and solutions, even service providers in the market, are a little bit rigid, and that creates a challenge. But if we can make small improvements across the board, and more open integration across platform businesses and service providers, those small things will all add up into ultimately a much better performing and greater outcomes. I don't think there's a one big sort of a wand that we can wave that won't cause huge disruption challenges. But I think if we can chip away at it small piece at a time, like with APIs, or other, leveraging things like central settlements. We've seen that in Lloyd's, but, can we use that more widely in the market? Data standardization like Swift, bringing all of these things together, but applying them to insurance, I think is going to be really key to actually getting where we want to be as a market. And dare we say it, keeping up with some of the other sectors like banking, investment management? I'm sure we lead them in some regards, but others perhaps not so much.
Yeah, definitely. So I'm just kind of aware that we're running close to the hour, so I don't want to take up too much more time. There was a few other questions we were going to discuss about AI and data standardization, but I think a lot of it has been covered between Darren and Piers kind of throughout the webinar anyway. So hopefully you've kind of gathered a lot of information already, and if there's anything else that kind of comes up while you've got questions, I'm sure Darren and Piers will be more than happy to speak to you after and set up a call as well about what we can do. But I guess just on that note, is there anything else you'd like to add, Darren or Piers? Just kind of like to say something, last few comments.
Well, just really, Jess, to thank you for chairing today's session. Darren, thank you for joining, and thank you to the audience for your time. Obviously, more than happy, as Jess mentioned, to have any follow-up conversations, any questions, etc. And I guess, Darren, over to you.
Likewise, look, we really do value the partnership and the way that you've kind of worked with us since we announced it, and even during the initial period, the collaboration, the way that you've kind of been very, very open around AutoRek and wanting to work with JP Morgan. I do think it's an evolving space, and I do think it's the way that the industry is going to solve some of these problems, and that again comes from whether you would classify AutoRek as an insurtech or a fintech or just a tech company. But I think it has to work, right? You have to bring the best of breed, the best of sort of the industry to come together to solve some of these quite huge problems to enable the industry to move forward. You can't deliver or you can't distribute new policies and write new business in the way that it's coming on, and delegated authority and push that business out if we don't solve the payment problem and the reconciliation problem. So I suppose kind of leaving it as that sort of open invitation to connect with us both jointly to solve some of those problems, but again individually around sort of broader payments perspective from the insurance segment, then we're more than happy to kind of engage in that conversation directly as well. So thank you again, Jess, Piers, for inviting us to take part today.
No problem. Thank you, Darren, and thank you, Piers. And yes, hopefully everyone will enjoy the rest of their afternoon. Thank you.